Can you guys see my screen?
Yep.
Okay, that's the question. So this company is a retail store that uses the perpetual inventory system. And GST rate is 5%. It's applicable to all the sales and purchases. What we have to do, we have to record the following transactions for this company. Explanation is not required. So the first transaction happened on January 4th. Let's do start January 4th. And what will be the transaction now? Obviously, we need debit, we need credit, correct? Which account we're gonna debit, which account we're gonna credit? We purchase equipment for $20,000 plus the GST. We signed the 3 months, 10% not payable. Did we pay cash? So now it's your time to shine. No, we didn't. Now let me check, start checking your chat because I know you're shy to say something and you start chatting right now. So what will be that? What we get? Which account should I debit? Equipment. For how much? Put here debit, and that will be my debit, and this will be my credit. Debit will be 20,000. What else I have to do? Am I done with debits? GST. Let's do the GST debit. GST. What will be that? Recoverable. How much will be that? That will be 5% of the above, right? Which is 5%. So how are we going to calculate it? 20,000 times 5%. 1,000. So now I have to give them something. What I'm going to give them? Not payable. So credit, not payable. And that credit will be for the total amount, right? Out of those two amounts, and we get the not payable. And we're done. That's first transaction. Let's go with the second transaction. What's happened in the second transaction? That will be on January 10th. What's happened January 10th? Debit. Inventory, can I go with inventory? Is it acceptable to go to inventory? Merchandising inventory. And how much I purchased on those one? 14,000. Is that my only debit? No. We have GST recoverable. And how much will be that? Still 5%. And I can easily copy this one and paste it here. I agree with this $700. Now looking for credit. What will be the credit account? That should be here, debit. Accounts payable. And that accounts payable should be equal to that amount. All right. Then next transaction on January 31st. What happened? Debit cash. Now how much cash we get? Shall we go with cash now or should I leave it as a calculation? Let's see why I'm getting cash. Why I'm getting cash? What I did? Sales. So let's get the credit on the sales. How much my sales? 180,000. Is that the only thing that the client's gonna owe me? I have to put the GST. Let's put the GST. Credit, GST. What will be that? Payable. And the GST payable again will be 5%. We have to charge them 5%. And we're gonna charge this amount times 5%. It's gonna be $9,000. So how much cash we want to collect from this client? Okay, let's get this cash. Sum of those two numbers. Not this one. Okay, small modification my formula here. That will be those two numbers. What's the next thing? January 31st. What else I paid? Monthly income tax. Debit. What account I'm gonna pay? Income tax expense. And that will be amount of $4,200. That's for my installment. Credit. Which account I'm gonna create? Cash. Is there any other options for account on credit? When I'm dealing with the government? No. Government doesn't accept not payable. They don't accept anything else than cash. So let's see now. Let's chase what's happened with the GST. What do we have? On one side, I'm going to have a GST recoverable. On the other side, I'm going to have GST payable, correct? So now we have to see where we are. Recoverable. I have on January 04th recoverable on $1,000, right? Then I have on January 10 another $700. On the payable side, I have on January 31st 9,000. Let's keep it chronological. That will be January 31st. I have $9,000 here. Where are my balances? On the recoverable side, I'm 1,700. On the other side, I'm 9,000. So what do you have to do? What's my net? We have to pay cash. How am I going to pay cash? If you want. So now there's another one tricky part. What I can do is I'm going to copy this and I'll show you what I'm going to do. Let's run those two accounts separately. That would be appropriate way. Instead of combining them and doing this together. I don't like this thing because at the end of the day, we have to close each account separately. Let's merge this one here and let's merge this one here. And here we have on January 31st, we have that $9,000. So what's my objective? Can these accounts have a balance? What do you say? Can I keep those accounts with balance? What should be my balance at the end of the period once I finish with dealing with the government? My balance should be zero, right? That my debit and credit should be equal. And my balance here also should be zero. That means eliminate debit and credit. How can I do that? Obviously, here I have to plug on the credit side $1,700. So my total should be here $1,700. And on the other side, I have to do the same. And here I have to do exactly the same. I have to plug here 9,000. So I can bring it down to 0. So what can I do? Now I have to do new journal entry, which will be on February 7th. And this one will be on February 07. So what will be my entry on February 7th? Let's start closing this one. First I have to, this is my debit and this is my credit, right? On one side. So first I have to debit my GST payable with $9,000. Then I have to credit my GST recoverable with $1,700. And the rest I have to use cash, which will be the exact difference. And that will be exactly what you're saying on your chat, $7,300, and we're done. Make sense? Any challenges with this type of questions? Do you see any challenge in this type of question? All right, let's see another question here. That will be GST question. And I'm gonna post you those Excel spreadsheets later, if that's okay with you. If you say that you don't want them, I'm not gonna post them. I don't know. Some people they say, no, 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 don't post that. We want to try it by ourselves. Right? You never know. Students always can surprise you. So let's see this question. So now the sales revenue for this company was for 20 is for $800,000. Product sold carries 6 months warranty. Management estimated that the cost of the warranty to be 3% of the sales revenue. What this company should do? They have to make provision. That's out of question. Once they have to match the sales with the warranty, correct? What will be the journal entry to do that? What will be the journal entry for the warranty or estimated warranty liability? Debit, I have to debit some account. Which account I'm gonna debit? Warranty expense. And I have to create some account. Credit will go to estimated warranty payable. Now we have to set on the amount. What will be the amount? Amount will be equal to 800,000 times 0.03. Correct? So how much will be that? 24,000? Do you have agreement on the 24,000? Okay. And here we should get the same amount. So what will be our correct answer here? Everybody see A as an answer in this question. Let's do another question here. On the warranty expenses. I told you I'm gonna chase you on the warranty expenses. You won't be able to escape without warranty and know how to calculate the warranties and how to record the entries. So what I wanted to do here, get this one, get this. So which one the following will be, there will be options here for the following. I'm just grabbing the question from the questions which I already posted for you. So first company offers warranty for their electronic goods. Warranty expense is estimated 2% of the sales revenue. In 2017, this company has 500,000 sales. In the same year, they pay 7,500 warranty payables. Let's do those transactions. What will be the first transaction? First transaction is going to be obviously the same. That will be for the warranty expense. Debit warranty expenses, credit estimated warranty payable. Now, how much will be the amount? We have to calculate it. So now, based on this case will be 500,000 times 0.02%. I don't want you to calculate me this. So what we're gonna get here? We're gonna get 500,000 times 0.02, 10,000. We get the first one. Later on, they pay warranty payment. Now, we have to be careful with the question, what exactly happened with the warranty? Did they pay the warranty or did they replace the items? Because based on that, you're going to have different credit account. But let's say in this case, they paid out the warranty payment. What will be the journal entry now? Can I record another warranty expense at this point? Once I'm paying the warranty. Obviously, I'm paying for the warranty. Can I go with the warranty expense again? No, I already recorded warranty expense. Warranty expense is not when we paying the warranty. Warranty expense is when we selling the items. Make sense? So if I already run out of option warranty expenses, then which account I should debit? Well, I cannot go again warranty expenses, so I have to go with the warranty estimated warranty payables in this case. So the debit will be estimated warranty payable in this case. So if I go with the estimated warranty payable, then on the debit side and record those, that will be, in this case, will be $7,500. $500, right? Now the question is which account I'm gonna debit. Sorry, credit. And since I'm seeing that I'm paying them, credit will be cash for the same amount. Now what's happened with my warranty, estimated warranty payable account? Well, we can easily bring that account and see what actually happened there and where we are. Some of the question might ask you what's the ending balance of the warranty payable account. So that will be estimated warranty payable. How can I get the balance for this account? Obviously, in this side, I'm going to have debit. On this side will be my credit. What kind of account first is this? Asset account, liability account, what do we know about these accounts? Is it balance sheet account or is it income statement account? What's the normal balance here on the warranty payable? Credit, obviously. Why? Because it's liability account. Liability account has a credit balance. No questions about it. Do we have beginning balance since it's balance sheet account? Obviously, it has to be beginning balance. In our case, do we have a beginning balance? Probably not. Since the question doesn't say we have a beginning balance, most likely we assume that we don't have a beginning balance. Okay, since we don't have the beginning balance, let's make it again. I like this font better. I don't know about you, but I find it a little bit interesting. Okay, we have the beginning balance, we have the ending balance here. Let's put this ending balance here. And we have both, beginning and ending. So beginning balance, let's say was 0. We don't know. It doesn't say, the question doesn't say. Is it, what is it? Let's assuming 0. So first we have warranty expense, warranty payable. So every time when you see amount coming to warranty payable, that means comes on the credit side. Which account we gonna debit when we have a warranty payable? There's only one option. It has to go to warranty expense. If you see credit and warranty payable, the corresponding account on the debit side is always in warranty expense. So we have the 10,000 here coming in. Now, during the month or during the period, we pay $7,500, which are going out now on the warranty payable account. So what is our balance at the end of the period? Beginning balance plus the credits minus the debits gonna give us ending balance. Make sense? So, shall we add a little bit more on this question? Do you want me to add a little bit more on this question to make it more interesting? So, this was the first year. Let's keep going. Let's see what's going to happen the second year. Second year, I'm going to grab this one now. And I'm going to change a little bit and see what's going to happen. So, same thing, warranty expense. Second year. Warranty expenses now are estimated at, let's keep it at 2%. In 2018 now with the second year, 2018, they had a sale of $800,000 and they pay in the same year they paid $15,000, $15,500. So that will be 16. Let's go with the $18,500 warranty payable. Warranty payments. So let's do the entry now. I'm just gonna copy and paste it because I can, right? So here, what we're gonna have? We're gonna have 500. That's not 500. That's here. That should be 500,000, right? 500 times 2%. Times 2%. So here I have $800,000 times still 2%. That's gonna be equal to $800,000 here. $16,000 is my expense. Correct? No, that's become very unusual amount. Let's increase that one to, or reduce it to $19,500. Warranty payments. That's how much we paid, 19,500. So, estimated warranty payable, we estimated that we pay 19,500. 19,500. So what's happened now in this case? We carrying the beginning balance from the previous period, 2,500. Then we plug in the warranty payable, 16,000. And we plug in the amount that we paid for the warranties. Now, what is our ending balance? Is it going to be credit or is it going to be something else? It's going to be debit. Make sense? Since here you can see it is negative 1,000, that means transfer here as a positive amount. So now we have accidentally this account now end up with a debit balance. Is it possible? Yes, it is. So what that means to us, if this happened in reality, what that means? Can somebody explain me what that means to me? If I'm the manager and I see this thing and I come to you as an accountant and ask you, hey, accountant, what happened with this account? What should I do now? What are you gonna tell me? Any suggestions? So think about it. No, we're paying for the warranty liability. We're paying. We're covering our payments. What is our problem here? We end up with debit balance instead of credit. Thank you. So what that means is that whatever I'm estimating as a percentage is not enough to cover my actual warranty. There's something wrong with my product. Either I have to adjust my estimate next year instead of 2%. Where should I go, Cassidy? What will be your suggestion? Go 3 or 4%. That's good suggestion. So that's gonna bring me to the on the other side, right? Because right now my expenses are not enough. The expenses that I'm making provision is not enough to cover my actual warranty. So the next year, what I have to do is let's do this next year. Copy here and let's move it for the next year. So if I want next year, let's increase this one to 4%. And if my sales now go to, where will be our sales? 800 or going down? Tell me some number. We're improvising now. Be part of the improvisation, please. Where do you want here the number to be? 1 to 10. 1 to 9, sorry. Choose one number, please. 7. Okay, 7. 7 is the number. And how much we paid? Again, 1 to 9. Let's go with 3. Okay, 13,500 we pay. So let's calculate our warranty expenses now. We are at 700,000, but we're changing to 4%. So where we are, that would be 7, and at the end we're gonna have 4. So now my warranty expenses are $28,000. What's happened with my actual warranty payable? Let's bring this number higher. Let's bring it to 20,000. 20,500. My actual payment is now at 20,500. So where is my balance now? We have to see. First, we carrying from the previous period balance of $1,000 on the debit side. So what we're gonna do now? 28 minus is gonna be uh, minus this one plus that one minus this one is gonna give us the ending balance. Correct? Are we back to normal now? Yes. What will be your suggestion now, Cassidy? If you see that Now I'm ending up with 6,500. You see, first year we're ending 2,500. Second year we're going on the other side 1,000. This year we're ending with 6,500. What would be your suggestion now? Should I keep with 4%? Now we can go down a little bit, right? Because now 6,600, 6,500, that's too much. Can we settle this warranty different way? Can we use another account? What do you think? Instead of paying the warranty, can I do something else about the warranty? If the customer comes and say, the computer doesn't work, I don't want to give him a cash. What I can give him? Another computer. If I use another computer, let's say in the same year, uh, Franconia, she didn't pay out. She replaced goods for a warranty. Goods for $20,000 as a warranty, as part of the warranty. Now become a pure improvisation of the question. What will be my credit now account here? Is it going to be cash? That will be inventory. And we're done. Make sense? Those are the two variations of this question. So now we can see all the possible scenarios that can happen with the warranty liability, estimated warranty payable account. First year we come with the normal balance credit. Second year suddenly jump on the debit side, which is okay. That means that whatever estimation we have, it's not enough, so we have to increase the estimation. The third year we're back to normal, but now we see the estimation now is getting too high. Now we can change it. And instead of settling in cash, we're actually replacing the items which goes with the created the inventory. Those are the two twists on this question. What's the warranty expense? How we calculate the warranty expense? What's the warranty liability? When you settle the warranty liability, when we actually settle the warranty liability, don't go with the warranty expense again. Start decreasing warranty estimated warranty payables. Careful if you go with the on the debit side, increase the estimates as a managers one day if you have to do that. And the last thing is you can settle the warranty not only with cash, but you can replace the items. Let's label this warranty and move to the next one. So GST warranty, what else? Payroll. Yes, payroll. Payroll will be the tricky part. I'm looking for the series of questions here that we can find, which will be the key here. Even though, now ignore the percentages. The percentages, it doesn't matter at this point. Trying to find here, there's some kind of series of question with pair or multiple choice questions. Maybe we should go with this scenario and go with this scenario. Let's go with the payroll. Can you guys see my screen? So what that means, the last sentence, ignore the basic Canada pension plan exemption, the one that you saw that from the Canada Revenue website that I show you that the first $3,500 are tax exempt for the Canada pension plan. In this case, in those questions, we ignoring that one. Otherwise, it will be too complicated. So these people, they have 24 employees who are paid on a monthly basis. The most recent month, the gross earning was $68,000. Income tax withhold are 15% of the gross earnings. Canada pension plan deduction is 495 for this question. Employment insurance is deducted as 1.88 on the gross earnings. All employees have 50 months withheld for charitable contributions. So every month we deducting $15 on top of everything for those people. Ignore the pension plan. Now the employer, what will be the employer? First question is what will be the employer's total share of the Canada pension plan and employment insurance payroll cost. Not the employee, the employer. So how are we going to get the employer portion? First, we're going to get the employee portion. And then we're going to get the employer portion. Both they have to have Canada pension plan and employment insurance. Those are the two things that we're chasing. Canada pension plan, employment insurance. And these guys too. The only thing that we know that employer pays whatever the employee pays 1-to-1. 1-to-1. Where the employment insurance pays to 1 to 1.4. Those are the proportions here. We already know them. They know that we know them. Everything is clear. Yeah. So how are we going to calculate the Canada pension plan? We have our gross earnings. Which gross earnings is, let's go here with gross earnings for that Canada pension plan will be trying to find some proper way to settle everything. Gross earnings will be 68,000 and the gross earnings is 68,000. Then we're going to apply the percentage. That will be the percentage here. For the Canada pension plan, we're going to apply 4.95%, and for the employment insurance, is going to apply 1.88%. So based on that, our percentage will be now the total deduction. Total deduction here will be this one times then that one, and the next one will be the next one, right? So in total, for the employee, we have to deduct that amount. How about for the employer portion, which is the question asked? Employer portion, whatever the employee doing, 1-to-1. So the portion here, 1, here will be portion is 1.4. So the total deduction for the employer will be employee time 1. And the next one is the employee time 1.4. So the total deduction for the employer in this case will be 5,155.76. Make sense? Now, if we have to do the journal entry, what else we have to deduct from the employee? We have to deduct income tax, right? And we have to deduct, the income tax for the entire amount, which is on the 68,000. We have to deduct the, how much is the percentage of the income tax? Do we know it? It's 15%, correct? So how much will be that? We have to deduct from the employee $10,200. If we have to do the journal entry, let's do the journal entry for the payroll. What will be my journal entry? Debit. Let's go with debit. Which account I'm gonna debit? Let's do first the journal entry for the employee only. Journal entry for the salary for the employee. Debit. Which account I'm gonna debit? Give me some suggestion. Salary expenses. I like this one. And how much will be my total salary expenses? The amount that I'm giving to employee. How much I'm giving them? $68,000. That's it. How much of the $68,000 they're gonna get? That's a different story. Let's see how much they're gonna get out of $68,000. Let's start credits. First credit. I have to deduct and withhold and later pay. What will be the first thing? Start first on the line. Income tax, what? I'm not paying it now. I'm gonna pay it later. What will be that? Payable. Okay, we got the income tax payable. What's the next one on the line? Just follow the lines. Canada pension plan, payable. I'm not paying it now. I'm gonna pay it later. Next one. Employment insurance, payable. Now there's one more thing. Every month we're gonna deduct $15 for the charitable contribution. How many employees we have? 24. And let's go this one. Credit, charitable, charity, charity payable. So let's get the amounts now. Once we have those things, let's get the amounts. What will be the amount of my income tax payable? 10,200. How much will be amount of my Canada pension plan? Next on the line, right? I can get those one. Charity payable. where we have 24 employee times $15 per employee. That should do the math. 24 times 15. 360 I have to deduct for the charity. And what's going to happen with the rest? So far, I'm not in balance. How can I balance this entry? I need a one more credit. What will be the last credit? Which payable? Salary payable. Credit, salary payable. Now I have to do the electronic fund transfer to my employees. How much will be that? That will be 68 minus sum of all these numbers here. So I have to pay them total of $52,795.60. Make sense? But this is the journal entry for the salary for the employee. What else I have to deduct? I have to check and do the journal entry for the salary deduction for the employee. For employee. Now I have to get the salary deduction for the employer. Give me an idea. Which account I should debit now? That will be the credit. Salary, that will be the payables. Which payables we're gonna calculate show? Those two payables. No questions about it. But I need debit here. What will be the debit? Debit is, I cannot go with the salary expense because the salary expense is, this is the expense. Now, whatever I'm deducting and whatever I have to submit to the Canada revenue, that will be employee benefits expense because those expenses are for the benefits of the employee. Make sense? That's why we're going to call it here payroll or salary employee, the employee employee. What was that? Benefits expense. That's exactly how is the code. Let me double check with that employee benefits expense. And I'm going to expense it right there. Make sense? Let's go. Let's go with one after another. In the questions here, in some of the questions, there's a one question here, but no, that's for the payables. Yes. The right amount is employee benefits expense. That's the right definition for this amount. And then we start getting the credits, which is the first credit. There are only two credits in this case, which is related to our employer. That will be the employer portion. That was the employee portion here on the top. If you remember, that's why we did this calculation in employer portion. We're chasing only the employer portion. That's employee portion. We can highlight it here with that green, and the employer portion we can highlight it with blue. We're chasing the number for the employer. The total deductions here we have to include the 15. So credit will be Canada Pension Plan payable for the same amount like above, And the next one, it will be credit employment insurance payable for the same amount, for this amount now. That amount plus time 1.4. And everything goes to the sum of those two is going to come to employee benefits expense. Last thing that we have to do is to submit payroll deductions and payables. So let's go. How are we going to do that? Debit. What we have to debit? We have to start one after another. First, we have to debit income tax payable. Then we have to debit Canada pension plan payable. Do you want me to separate it by the employee and employer, or you want me to go one lump sum? Which way you prefer to be more easy for you to catch it? Separate, okay. That will be the employee. And then debit employment insurance employee. Then we're gonna debit Canada pension plan employer. Debit employment insurance employer. And let's do those amounts. First, we're gonna start from here. And you're gonna get the dash 2. Then we're gonna get those two. And how we're gonna settle this payment, these payables? Credit? Only one option we have here. What will be our credit? Cash. No question mark. There should be no question mark here. Canada Revenue, they don't accept anything than cash. Only cash. And that will be equal to the sum of all this amount. Can we easily check out ourselves? Yes, this amount plus this amount should give us exactly this amount. That's from where they get those amounts. 14,844.40 and 5,155.76. Those are the amounts that we have to pay, which are exactly this amount. The last thing that we have to pay is those 360 for the charity. But that will be not for Canada Revenue, that's gonna be for somebody else's. Again, we're gonna pay those one cash. And we're done. Make sense? So process all this thing. Let me post this Excel spreadsheet and show you where I'm posting it. Just a second, let me stop sharing. Let me save it first. And I'm gonna save it for you and I'm gonna post it, but let me show where is it so you can easily find it. That will be calculation from class. And today is February 3rd, 03rd, 2025.